Michael Sonnenfeldt, Tiger 21 is a fairly exclusive club. It's a network for entrepreneurs with investable assets of more than $10 million. So what are they saying right now over Tiger 21? Are they bullish or bearish?
They're somewhere in between. In a recent poll we just did of our members, about half of them think the market correction is about average, what they expected. About a third think that it's going to get worse. So they're pulling back a little and they're concerned, but not overly concerned.
I would assume a lot of your members have money in hedge funds. Hedge fund performance has been varied, not great so far this year. Do they intend to pull the money out of hedge funds? What are they going to do?
So our members have been pulling back on hedge funds since 2008. What they found in 2008 was that they owned a lot of complicated structures that they didn't understand, and it's been sort of back to basics then. About 10 or 15% of their assets are in hedge funds, which is a little bit lower than it used to be.
What about names of stocks that ordinary investors hold? Are they big into Apple, Berkshire Hathaway?
Yep.
So talk about what ordinary investors can glean from the holdings over at Tiger 21.
I think the most important thing is, first of all, most of our members are former entrepreneurs who have sold businesses when they were really successful, and now they're learning how to manage the wealth to preserve it. And what they've learned is to roll up their shirt sleeves and get involved in things that they have knowledge about. Everybody has knowledge about something, and they think of investing sometimes in a different box. But if you can apply the specific knowledge that you have to the investments you make, you can get an edge. And that's why our members are so heavily invested in private equity, where they're getting involved in companies that have some relationship to the companies that they built their wealth on.
And Tiger 21 also says keep 3 to 5 years of expenses in cash, I guess in case of a rainy day. This doesn't sound particularly bullish for entrepreneurs. Usually they're the ones who like to risk it all.
Yeah, so first of all, we don't say anything. We just poll our members to see what they're doing. And our members are holding about 12% of their investable assets in cash. And we know that people who live on passive returns tend to live on about 2% per year. So statistically, it's about 4 or 5 years of living expenses. But another way to think about it is when you have enough cash, you don't have to liquidate at the bottom, which is the worst time to liquidate. One of the things people don't realize is 100-year returns in the markets are 8, 9, 10%. But investor returns are only 3 or 4 or 5% because investors tend to overreact in the bad times. They sell when something is low and they buy when it's high. So our members want to have enough cash not only to avoid being pressured to sell at the low, but also to have cash to pounce on an opportunity when it comes their way. So they're holding cash for both reasons.
And because this is a global economy, what are your members saying about emerging markets right now? Because clearly there's a lot of worry about what's going on in China.
Sure. So I think the biggest issue people are trying to figure out, like everybody else, is what is a hard landing, what does a soft landing in China mean? One of the encouraging signs is the consumer side of China seems to be picking up, not just from government reports, but actual reports of the companies doing business. That would say maybe China won't have a hard landing, but the emerging markets are having a tough time. Obviously, they've had a tough year this year. They're cheap by historic standards, but they could get a lot cheaper.
And then finally, is there a political bent? What are they saying about the current crop of presidential candidates? Do they give any overtures about whether or not they'd rather have a Democrat or Republican in the White House in the next election?
You know, I would say that our members are centrist by nature. We do run the full political spectrum. It's way too early to tell. Who knows how the 17 is going to winnow down on the, or is it 16 now on the Republican side? And obviously people who are supporting Hillary on the Democratic side are concerned that she seems to be having a tough time. So presidential politics are a tough thing right now, and it's not the main focus. We're more interested in what is the Fed doing and what was the impact on last week's work. And I think people are concerned because what the Fed said was twice, this was unusual, about international concerns. Now the Fed isn't just worried about the U.S. economy. They seem to be monitoring the international economy as well.
All right. Well, thanks a lot, Michael.
Thank you.
And thank you for watching The Street.